Well, after a major sell-off in the biotech space last week, investors are hoping for some more stability as we kick off a shortened trading week on Monday. Here with more analysis is Steve Freedman, Senior Investment Strategist at UBS. And Steve, how are you feeling after last week's meltdown? Stocks are up this morning, but do you see more volatility ahead?
I think volatility is going to be a feature of investing in the stock market this year. This is something we've been talking about really even when we launched our year ahead the flagship piece in December. This is a year where the market is already at valuations that is somewhat above the long-term average, and it basically has to rely on earnings growth to post further gains. And we're also expecting the Fed to have its first rate hike. That typically is associated with volatility. And the result is that you will see these ups and downs. Our belief is that you will still see an upward trending market and that the pace of earnings growth, if you exclude the energy sector, about 8%, should be giving you the pace of price gains for the next year.
All right, so some bumps ahead. We have a few days left until the end of the first quarter. What are you telling clients in terms of what sectors to watch for? Give us your take.
Well, our expectation here is that the U.S. economy will be leading the global economy in terms of growth momentum. And therefore, we want to have some exposure to cyclical sectors, but we also want to have some domestic exposure. So in terms of sectors, our preference is for technology and consumer discretionary. Those are the two preferred sectors. We also like industrials, but a bit less than the two prior ones. But one of the aspects of our positioning is that we are highlighting small and mid-cap companies as being preferable to large caps. And one of the reasons here is really the more domestic focus of small cap companies, and also being a bit more immune to the strength in the dollar that we've seen over the last few quarters.
All right, now let's talk about some of the economic data released this morning. Consumer spending only rose 0.1% in February, even despite the long ride with low gas prices. I mean, does this worry you? Is it really just about the cold weather, or is there something bigger here?
You know, it's going to be very difficult to disentangle the weather effects, which I'm sure are material in what we're seeing. I think it's quite clear that over the last few months you haven't seen Americans go to the mall when it was freezing cold. But it'll take longer to see whether this is more durable. I personally don't think that this softer consumer data will stick. I think that, as you mentioned, the boost coming from lower energy prices will kick in. And more importantly, we just have a pretty robust labor market. That's one of the key drivers of consumption. So I'm not too worried about the weakness in the data that we've seen so far.
All right, now the Fed's preferred inflation gauge, the PCE, only rose 0.1% in February. Now that's the core number. So can the Fed really justify a June rate hike with these weak numbers?
Well, I think the trend is likely to be for PCE to rise gradually over time. But I think more importantly, from the Fed's point of view, they're not likely to be looking at PCE, which is really a lagging indicator of what has happened. They're going to be much more focused on labor market indicators. And if indeed, as we expect, we continue to see the labor market tighten, that is likely to be a much more important factor in dictating the first rate hike.
Even though the Fed has, reiterated in their minutes report and other speeches that inflation is going to be one of the main factors in determining a rate hike?
I mean, if you have core PCE stay where it is, then it'll be difficult for the Fed to hike. But if you have a gradual pickup, and even if core PCE is below 2%, I think that wouldn't be incompatible with the Fed tightening for the first time if it believes that the labor market justifies it.
All right, Steve Freedman, Senior Investment Strategist at UBS. Thanks for your time this morning.
Thank you.
I'm Scott Gam, and you're watching The Street.